Hey traders, welcome to LutaMarkets, your go-to spot for leveling up your trading game, and I'm pumped to kick off our two-part series on the combo algorithm trading strategy. This is a powerful, flexible approach that works whether you're just starting out or you've been trading for years. Today, we're diving into the basics, variables, what they do, and how to use timeframes. I've also put together a book called The Combo Algorithm with all the details and examples you need to master this strategy. And guess what? It's completely free for everyone in our LutaMarkets Telegram group, link in the description. Grab a notebook, maybe a snack, and let's build your trading edge. If you love practical trading tips, hit that subscribe button, give this video a like, and join our community. Let's dive in. What is the combo algorithm? The combo algorithm is like a roadmap for making sense of wild market swings. It's built on smart money concepts, mixing price action with clear rules to spot high probability trades. Instead of guessing where price is headed, we use specific variables and timeframes to make smart, informed decisions. This series covers 5 key steps, but today we're focusing on the first 3. Variables, the building blocks of our strategy. Functions, what each variable does in a trade. And timeframes, how to analyze markets step by step. By the end of this episode, you'll have a solid foundation to understand how this strategy works. And if you want to go deeper, grab my free book, The Combo Algorithm, from our Telegram group. It's packed with examples to make this crystal clear. Let's get into it. Step 1, understanding variables. Variables are like tools in your trading toolbox. They help you stay flexible no matter what the market does. The combo algorithm uses just 4 key variables, and they're easier to get than you might think. Let's break them down. Order block. This is a price zone where the market makes a big move, often sweeping stop losses, we call that a liquidity raid, or filling a fair value gap. It breaks through a support or resistance level and closes with the candle body above for a bullish order block, or below for a bearish one. For example, imagine price rockets through a resistance level with strong buying volume and closes higher. That's a bullish order block. It's where big players, like institutions, leave their mark. Rejection block. This is formed by 2 candles where their wicks hit a liquidity point or rebalance a fair value gap. A sell candle followed by a buy candle creates a bullish rejection block, showing buyers are stepping in. A buy candle followed by a sell candle makes a bearish one. These are great for spotting potential reversals. Fair value gap. This is a 3-candle pattern where price moves so fast it leaves a gap. In a bullish fair value gap, the high of the first candle doesn't overlap the low of the third candle. In a bearish one, the low of the first candle doesn't overlap the high of the third. These gaps show market imbalances that price often comes back to fix. Fractal low or high. These are swing points, highs or lows where price turns around. They're liquidity zones where stop losses or pending orders pile up. Most traders recognize these as key support or resistance levels. We call order blocks, rejection blocks, and fair value gaps volume tools or inefficiencies because they show where the market is out of balance. Fractal lows and highs are liquidity points where orders cluster. While it's not required, these variables are stronger when they involve a liquidity raid or fair value gap rebalance. My book, The Combo Algorithm, has tons of chart examples to help you spot these patterns easily. It's free in our Telegram group, so check it out. Step 2, functions of variables. Each variable has a specific job in the combo algorithm, like characters in a story. Knowing what they do helps you decide when to jump into a trade or stay on the sidelines. Here's how they work. Volume confirmation. Order blocks, rejection blocks, and fair value gaps confirm there's real volume pushing the market. For example, a bullish order block after a liquidity raid shows strong buying power from big players. Inducement. Only fractal points can act as inducements. These are like traps that lure retail traders into bad positions before price reverses. For instance, a fractal high might trigger stop losses before price drops. Trigger. Fractal points or fair value gaps can be triggers, signaling that a trade setup is coming. Think of these as a green light to get ready. Entry or execution. Order blocks and fair value gaps are where you actually enter your trades, backed by confirmed volume. Trouble area. Fractal points or fair value gaps can act as zones where price might stall or reverse. These are key for setting your stop losses or take profits. If this feels overwhelming, don't sweat it. It'll make sense with practice. Try spotting these variables on a demo chart. Mark order blocks and fair value gaps on a 4-hour chart and note whether they're confirming volume or acting as entry zones. My book in the Telegram group breaks down each function with real charts so you can see exactly how it works. It'll help everything click. Step 3. Timeframes and analysis. Timeframes are the backbone of the combo algorithm, especially if you're trading intraday. We use a specific set to keep our analysis organized and make sure we're trading with the trend, not against it. Here are the key timeframes we use: 1 week, 1 day, 4 hours, 1 hour, 15 minutes, 5 minutes, and rarely 2 minutes. Picture these timeframes like a staircase. The higher ones, like 1 week or 1 day, carry more weight because they show bigger market moves. Here's how we analyze them. Top-down approach. Always start with the highest timeframe, like 1 week or 1 day, to find major variables like order blocks or fair value gaps. These set the market's direction. Synchronize variables. Then move to lower timeframes like 4 hours or 1 hour to find variables that line up with the higher timeframe's trend. For example, a 1-day order block might pair with a 4-hour fair value gap to confirm the direction. Patience is key. If you don't see a clear variable on a higher timeframe, don't trade. Wait for the market to set up properly. Random trades are a fast way to lose money, but the combo algorithm rewards patience. Here's a tip to get started. Open a demo account and practice this top-down approach. Start on a 1-day chart, mark a strong variable like an order block, then check the 4-hour chart for confirmation. My free book in the Telegram group walks you through this process with step-by-step charts, making it super easy to follow along. Outro. That's a wrap for episode 1 of the combo algorithm on LutaMarkets. You've learned the 4 key variables: order block, rejection block, fair value gap, and fractal points, their roles, and how to analyze timeframes from the top down. This is the foundation you need to trade like a pro, and in episode 2, we'll bring it all together with logical elements, combos, and real chart examples to show you how to make trades happen. For more help, grab my book, The Combo Algorithm, totally free in our LutaMarkets Telegram group, link in the description. Join our community for extra resources, smash that like button, subscribe, and drop a comment with your questions or what you'd like to see next. Thanks for watching, traders. See you in episode 2.